Hello, I'm Doris. I'm here to share with you about the updates in my stock account. Today, my stock account has earned $87 despite the post-market price. Today is also the release date of January CPI data, which supported the Fed's hawkish argument, so the US stocks closed mixed. In my account today, the two ETFs that I currently have made neither a share or a gain or loss, so right now the net asset of my account is 68,554.89. In the market, today's market closed mixed, with auto manufacturers rose for 3.9%, semiconductors rose for 2.4%. On the other hand, beverages and many other industries decreased for less than or around 1%. Dow Jones Industrial Average decreased for 0.46%, Nasdaq rose for 0.57%, and S&P 500 made a loss of 0.03%. U.S. stocks closed mixed on Tuesday, with the Dow and S&P 500 lower and the Nasdaq slightly higher. The U.S. January CPI data supported the hawkish rhetoric by Fed officials about the need to keep raising interest rates and remain high for some time. Analysts say the risk that the Fed is forced to remain aggressive and plunge the economy into recession is rising, but expect interest rates to peak this summer. Investors welcomed the closely watched CPI data on Tuesday. The Labor Department reported that U.S. inflation turned higher in early 2023 due to the impact of rising housing, natural gas, and fuel prices on consumers. The Consumer Price Index, which measures a basket of general goods and services, rose 0.5% month-on-month and 6.4% year-on-year, both above the average forecast of economists surveyed by Dow Jones, above 0.4% and 6.2%. The growth has slowed for 7 straight months since June, when CPI rose to 9.1%, the highest level since 1981. But now the pace of decline is starting to show the signs of stalling. In terms of specific data, the seasonally adjusted U.S. CPI rose 0.5% month-on-month in January, the largest month-on-month increase since June 2022 from a negative 0.1% last month. The CPI rose 6.4% in January from a year earlier, the seventh consecutive month of a slowdown and the smallest increase since 2021. The previous value was 6.5% increase. Excluding volatile food and energy factors, the core CPI rose 0.4% month-on-month and 5.6% year-on-year in January, while the average economists surveyed by Dow Jones expect 0.3% and 5.5% respectively. It is worth noting that before the release of the CPI report, the U.S. Bureau of Labor Statistics adjusted the CPI weight and calculation method of the owner equivalent rent related to housing costs was increased, while the weight of used cars decreased. According to the analysis, these adjustments may put upward pressure on core inflation in January, but they will help push down the subsequent inflation rate. The risk is rising the CPI data forced the Fed to keep the edge and push the economy into recession, said Edward Moya. But Wall Street still believes the interest rate will peak this summer. Lombard Odier Florian Elpo, head of macro research at Asset Management, said, "It is increasingly clear from this report that controlling inflation will take longer than expected." The data, he said, combined with extraordinary January jobs and report and signs of consumer resilience, highlighted the resilience and durability of the U.S. economy and price pressures. Despite the Fed's aggressive rate hike policy, he said, thus, the data further support recent arguments by Fed officials that they need to raise rates further and remain high for some time, perhaps even to a higher peak than previously expected. Analysts said the U.S. January CPI report showed that annual inflation continued to cool, but there was still considerable uncertainty about the future. Looking ahead to 2023, Some global factors and Fed policy will jointly determine whether they will continue to put downward pressure on inflation. While year-on-year CPI growth continues to fall, there have been some recent signs that U.S. inflation remains firm. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.